dollars on our mind. Ideas all the time. We might get distracted, but we're building wealth just fine. This is dollars and distractions. If we went off track, just know we're coming back. More money, more mindset, no holding back. Dollars and distractions.
We want
Hey,
to do
I'm
an introduction.
Maryanne.
Yeah. And I'm Bec.
And this is Dollars and Distractions. And we've hit
are
the
we
ground
doing?
running with distractions. I'll let you know in a second. I wanted to
Okay.
start with a quick story because it's A, really cute, and B, it reiterates what we do. So I was driving to work this morning and I was talking to my son, Chad, and his mate. I drop a mate, beautiful kid, off to school each morning with him.
Yep.
And I was talking about I have a meeting today. You know, I don't have to dress too snazzy because one's online and then other phone meetings. Anyway, I was talking through that. And then my son's friend in the back pipes up and said, he asked something about what do you charge for a meeting? Now, this is a 12-year-old. A 35-year-old stuck in a 12-year-old's body, I must
He's an
say.
old soul.
Oh, he's a beautiful old soul. But so too is my son, Chad. So birds of a feather. But so he asked how much I charge and what clients pay for that. And then my son, Chad, who has been with me along on this journey for the last almost 10 years, said, yeah, that's right. How do you get paid? And I was like, well, I'm so glad you both asked. My future clients. I said, I actually...
Or workers.
Yeah, or future workers and clients. I don't know. Who knows? But yeah, I said, no, I don't charge my clients a cent. I actually... I said, I don't charge my clients a cent. They don't pay for a meeting with me. It's free. And then Chad said, how do you get money then? And I was like, well, the banks pay me. Oh, yeah, that's right. And I thought if my own son, who is around me when I'm talking, and I talk a lot about work and what's going on, and I like to be open with them so they can learn. And if he forgets how I get paid, how many people out there still don't realise how a mortgage broker gets paid?
Yeah, good point.
Yeah. So I just wanted to share that. I thought it was
I don't
really
think
cute.
that's common knowledge, though. I think people, unless you're in, or you know someone who does do broking, I think even when I worked in a bank, I think the assumption was, but I feel like that was very led back sort of years ago. It was very much broker versus bank.
Still is,
Even the
isn't it?
stigma in the bank was, brokers were the enemy. And probably the same likewise. I think I still get, I think I still get the gist when we go to brokers events that banks aren't everybody's friend, but they are. I mean, to certain, you know what I'm saying?
I know exactly what you're saying. There is really no them and us if we all work together. Just there's a client at the end of every scenario, every story, every situation.
Yeah. But I think in sales meetings, we used to talk about, like home loans and things like that. And that was obviously, that's the biggest bread and butter of a bank generally is your home loan book. But it was talked about, why are we different to a broker in a bank than we are? And those points were raised, because it was a negative that the broker gets a trail,
Well, and that's one of the things that made me want to become a broker when I had really great clients going to brokers and getting looked after by brokers, and I kept losing deals to brokers. And I was like, I remember saying to another staff member, that broker would have got paid this much money for this loan that, they took from me, which, looking back now, they didn't. The client just made a choice.
Yeah.
But that's what made me go, you know what? I actually want to go and be one of the brokers and then have a plethora of options that I can offer clients rather than, try and fit clients in this box.
Yeah.
But
I think even though when we delivered that to clients to say, why as a bank we were better to come directly to, saying that a broker gets a trail, even then, I don't think the education was that the bank paid that trail to the broker, not so much that it was coming out of your loan You know, the assumption may be that
you're paying extra for that loan because they need to pay the broker, which is absolutely not the case.
Yeah.
In fact, in some cases, you can pay less because the broker's pricing that each year, trying to keep that interest rate down.
Yeah. And again, I suppose if you've got the right broker too, because,
And even back in the day, there was talk that brokers would write, you know, you only need a loan for 800, but let's do $1 million. And then you've got that extra money sitting there. And I know there were some cases of brokers doing that, and it's not necessarily the right thing for the client. But now we get paid on what the client uses, not what the loan amount is. So if I did a loan for $1 million and the client used 20,000 of that, I get paid on 20,000, and rightfully so. It does hurt when you know the client's using that money for something and don't use it for a while, but you know, such is life. I don't think we should get paid on money that the client doesn't necessarily need or use.
I suppose that comes back to like doing your homework on a broker too. It's the same as a bank, you know, like even one of the dads at school, like when I did start with you, like in broking, he said he had a broker and he'd recently been in touch. I think he'd refinanced a business loan or something like that. And that broker obviously got the clawback and contacted him and was quite aggressive to say, why didn't you contact me?
I don't know that I'd be
first?
aggressive, but I absolutely would call and say, I could have helped you.
But I feel like that's the relationship you've got to kind of, like if you meet with a broker, it's going to be the feel that you get. I'd want to be comfortable to call my broker and say, look, you know,
this is happening.
Yeah. This is what's happening in my life. This is the goal that I've got.
And there'll be some reasons where maybe you don't feel comfortable. You didn't like that broker. Sure.
Yeah. I'd hope that we're not
the
like
clawback
that, though.
hurts though.
Yeah.
I think the largest clawback I've had was $15,000.
What's a clawback?
Yeah, good question. So when we do a loan for a client, unlike any other industry, any other job, we do the work, and then within 2 years, the bank can come and claim that money back up to 100%, depending on when the loan gets closed, if the loan gets shut down within that 2-year period.
Yeah.
So I have done a loan for a client, got them a great rate. They wanted a bit extra. I said, look, we are maxed out. You know, we've talked before. I'm going to be err on the side of caution. I'm going to be a lot safer. And thank God, because the interest rates are now skyrocketing, and I live by that and I will continue to lend by that. But she found another broker who could go a little bit higher. So that broker refinanced everything. And then, so because that was within 6 months of that loan settling, I got a clawback for the entire amount. So I've done all that work, and then all that income gets taken out of my account.
Yeah. So I think it's clear to say then that when your loan does settle, the bank pays a percentage based on your loan amount to the broker. That's the bank that pays that.
Correct.
And that is the amount that can be taken back in that first 2 years.
Yeah. And
that amount.
Depending on the bank. Every bank has a slightly different policy. Yeah. So some banks will tier it.
Yeah.
So if it's 8 months in, they'll leave you with 8 months worth of commission and take the rest. If it's, I don't know. To be honest with you, this is like what banks pay what commission. I don't pay attention. I feel like in my heart, if I'm just doing the right thing by my clients, the right thing will happen to me. And I don't need to worry about when I'm getting paid and when the client has to keep the loan until clawback and all that jazz.
But isn't it interesting, like if you had a tiler come into your house, say you're doing renos, you had a tiler come in, do the work, you pay them 10 grand, then a year later you sell that house and you go back to that tiler and say, look, I don't live there anymore, but I want my 10 grand back.
I've sold the property.
Can you imagine? Yeah.
I couldn't imagine the
It's
tiler
the only
going,
industry-
oh, no worries, here you go.
Yeah. It's quite interesting, isn't it?
It is. And I get the premise behind it.
But I feel like it kind of protects bad. Like it's something in place to protect, not that there's bad brokers, but I guess there are brokers out there that would be writing to particular banks for certain reasons, whereas...
And then say 6 months gone, they need a cash injection. They say, call the client up and go, let's move you to this bank now.
Just so they can get another
upfront commission. Yeah.
Which is sad. Yeah.
Can I be honest? I honestly, and maybe it's because I don't frequent in those circles. I don't see that happening these days. I mean, clawback would obviously stop that anyway, but I don't see the old school brokers that maybe could have been out there.
I just think, that might be woo-woo of me though, but I think the people that you congregate with would be very similar. So I don't think we would be around those people anyway. I'd have no doubt that there are still people out there that do that because money creates greed. But I think it's just that relationship that you build I mean, I'd hope that a client would know that I think our genuineness would come through
I think
enough to
that's
go,
one
that's
thing
not what drives us.
when I'm looking at, let's say it's 12 months down the line and I say, or let's say it's 4 years because there's no clawback issue there, there's no bias or anything. 4 years on, I do a pricing on the client's loan. I'll go back to them and say, this is where your bank is offering, what your bank's offering. This is how it compares with the market. If you were to move, this is the cost, this is the overall savings. Then I leave that with them.
Yeah.
It's not for me to judge whether $1,000 savings in the first year is worthwhile or not for them. That's their choice. Yeah. I've got some clients that go, oh, well, my bank kind of came to the party. Great. Let's just stick with the devil, And then I've got other clients that say, no, let's absolutely move. And I prefer to leave that in their hands.
But also, and not bank versus broker, but banks don't do that anymore.
No.
Don't they? They don't call, well, privacy reasons and things, you can't even make as many. Who picks up their phone anyway?
Yeah.
Where I think with a broker, you've got a relationship.
I made that mistake yesterday. I picked up the phone and it was, they want to talk about my life insurance or health insurance. I think it was health insurance. And I was like, ironically, I don't have any. So I don't know why you want to talk to me about it.
Because I know you don't have it.
Probably.
There you go.
Don't you get those calls all the time?
But I'm one of those people that if it's private or I don't know the number, I don't pick it up.
I have to. It's a work phone. I have to.
It's a
Could
bit
be a
different.
bank. Could be a new client.
If that was your personal phone, would you pick it up?
Yeah.
Would you?
Yeah. And then I'd politely, because I'm always, oh, no, thank you. Trying to be super polite.
I hear you. Yeah. I'm like, no, thank you. I'm not interested today. And I'm like, just be.
And then
it keeps going. I'm like, just be assertive.
I wait for them to confirm. Oh, okay, no worries, before I hang up, because I don't want to just hang up.
Yeah.
I don't know why. People pleaser in me. Do you know what? This wasn't even the topic for today.
Well, you never told me the topic. You just
I know,
started with a story.
so you announced the topic in our last podcast, and when I edited it, I was like, oh, that's right. I hate how I say edited it. Anyway.
That sounded like you said it edited.
Yeah, maybe I did. Edited.
There's always one word in a podcast,
I need to
isn't
slow
there?
down. When I edited it, instead of when I edited it.
That's pretty cool.
Edited it. Anyway, we did this last time too, by the way. It was trajectory.
I was just going to say that because I was listening to last week's a little bit this morning, and then I was like, trajectory. Is it trajectory? Anyway, we don't need to revisit
we don't need to
It is
regress.
actually trajectory.
Yeah.
It's the T one.
Yeah.
Yeah. But now I'm trying to remember.
Are you sure? Oh, anyway. Okay. We're digressing. Today I wanted to talk about unlocking equity.
Unlocking.
Do you remember saying?
Oh, equity unlocks.
Yeah.
I mean, that's totally different to what we started at.
I know, because got in the car this morning, had that conversation, and I thought my own son doesn't know how I get paid and how much I charge. So I wanted to start with that, but effectively it kind of took us down I'm happy for that.
That's how we roll.
That's how we roll.
Yeah.
And I don't know that unlocking equity or equity unlock is going to be a full 20, 30-minute episode, but
it's probably
talk about it.
A topic that not many people would be aware of.
Yeah.
But in saying that, it is an aging population. Like we are going to have more old people because people aren't reproducing these days.
Well, let's call them
much.
mature. We're mature.
Why are you putting us in that category? We're not an equity unlock stage.
Not yet. No.
No.
You look at you, you're like, are we?
I'm like thinking how long. Yeah.
How old am I? No, we're not. So let's explain what is equity unlock.
Okay. Well, so like yesterday we had a meeting with a particular finance company that were sort of opening up the market to things like this, but it's basically like a product that you can utilize, and it's as you get older and your circumstances change, your incomes change, what's on paper is obviously not always what a bank is wanting to see in terms of serviceability, but then you might have an asset that is your asset rich.
Ooh. I mean, I've heard of asset rich, but I've never heard of asset rich.
I get it. Asset rich, but cash poor.
Yeah.
So, and I think at the moment you'd find not just aging populations that happening too, but the asset has really increased, but then you might not have as much income pass. Can be.
And we talked about this after the meeting when the bank had left the office. And this is a great reminder that it's not for everybody,
Yeah.
and it would be a situation.
You need legal
type.
advice.
Yeah. We would absolutely encourage you to get some advice.
Legal advice.
Yeah, and have that one-on-one conversation with the broker first, so that we would take you through the numbers. We would give you all of the information that you need, and then we would recommend you go and seek legal advice so that you know, okay, this is what I'm doing and I'm comfortable, or no, this isn't what I want. But effectively, it's more like we've done in the past. We've done equity unlocks for seniors. So this isn't for any age. This is for the more mature audience.
Love that.
And
Do you
it
reckon they listen though?
Sorry?
Old
Sorry, I
people
can't
listen.
hear you.
It's your maturity.
I need a hearing aid.
Wait till we need new
I
teeth,
probably
false teeth.
do. I've got great teeth.
You do,
I
actually.
hope they don't die on me. They're crooked, but they're great. Okay, so this gentleman, he was living in the family home that was worth quite a fair bit. So sitting on a whole ton of equity. He had, let's say it was an $80,000 home loan, just little residual amount left over. The loan to value ratio we're talking about, so the loan amount compared to the value of the property, would have been 5%. It's next to nothing. He was struggling so the bank had said to him, now that you're this age, you have to get this $80,000 repaid by this date. So they had given him a much shorter loan term, which meant that his repayments were through the roof. And he was on a pension. So he's having to give majority of his pension to paying his loan. He was getting behind on his rates. He didn't have enough money for food. And his goal, long term, was he wants to buy a caravan. He wants to travel around Australia while he and his partner are able to and young enough. And then they'll come home after 2 years. They'll sell the house, and then they'll go and move into a retirement village and so on and so forth. So in that scenario, we talked through the numbers, and it made sense for him to have an equity unlock where he can tap into the equity in the home, not necessarily have to make repayments on that home loan anymore. So we've got rid of it's optional. We got rid of that. He can then buy the caravan, travel around Australia, rent that out to whomever if he wants to, so that he can make repayments on that new loan if he needs to. But effectively, when he comes back after the 2-year mark, which should be coming any time, he sells the property, repays that debt, and then takes the rest of that equity and goes and buys another property.
Yeah.
To him, it was more just he didn't want to be forced to, I have to sell now because I can't afford to keep living where I am. He didn't want to be forced into that. He still wanted to keep it just there, just in case, and then finish this little bit, and then he's ready to move on.
Yeah.
So it was almost a no-brainer for him, and that's something that he did, and he's living happily now.
Yeah.
But it's not for everybody.
I was just going to say, it's not for everyone. But it's also cool to have that, to know that option is there, because, once you turn 65, say you are fully retired, let's say you own your property, you're on a pension, whatever that is, $1,000 a fortnight or whatever. You in your head, you'd be thinking, all right, well, say the car dies, you need a new car, and where do you pull that from when you've got
so your alternative is I sell my house to buy a car.
Right, yeah.
And
but
then
in
where
your
do
head,
you
you'd be
live?
thinking, oh, well, I can't, on paper, I wouldn't be able to service a $30,000 car loan or something. But you can utilize that equity that you've worked so hard to pay off, over your lifetime, and tap into that.
Yeah.
The purpose of the legal advice is, I know you've probably seen it too, is like there has been, like, what I've seen, conflict between, which is really sad, conflict between family members, particularly.
It makes me feel sick.
It makes me feel yuck, yeah. But those elderly or mature people's children having problems with that occurring because it taps into their inheritance. So reminding that equity unlocks are optional to pay back. And if you don't choose to pay back, if at whatever stage you do pass, your estate will pay back the amount that you owe, whatever that amount is.
So the kids would rather mum and dad go without the new car that they need or the experiences and travel while they still can. Oh, mate.
Yeah.
I like to think that my children, I hope to leave them an inheritance.
And you instill those values. But I think.
But if they're then coming to me like a vulture saying, oh, how much will I get? I'll be like, oh, sorry, I'm going on a spending spree.
100%.
Not happening. I'm not working my backside off so I can have that greed. Not
No,
happening.
me neither. No, but that's the purpose of seeking legal advice as well. But I think it's
So
pretty
you can
important.
find out if your kids are jerks.
I
No,
reckon going
no.
off what I mean, we all know which ones are jerks and which ones aren't. I mean that in the nicest way possible.
Yeah.
Which ones would be like that and which ones wouldn't. But in saying that, I think it's pretty freeing for elderly, like because I think it would be pretty. I know I'm pretty independent. You're pretty independent. Like to get to an age where you lose not only your ability to, move and things like that, but that financial independence.
Mm.
I used to see that a lot in the bank, kids coming and helping mum and dad do, elderly do their banking. But that must be really hard in your head to get your head around when you've lived a life so independently.
Well, imagine even something like losing your driver's license.
Yeah. But how empowering
Imagine
that you
having
could,
that gone.
yeah, you could have that financial independence to be able to use that house
Just have
to,
one last thing.
yeah.
So there's another way to that. So not just having the no repayments way, but I'm having a lot of clients at the moment, particularly because there's a whole lot of equity in their property, where they're wanting to unlock some of that equity to do like a cash out type.
Yep.
So, we're talking to a client at the moment who wants to buy a business, potentially using some equity in the property.
Yep.
So that's commercial loan. It's very different, but exciting to be working on with her. And then another client who's looking to tap into some of that equity to invest in shares.
Yep.
To start growing that way. And there's again, this isn't our advice, but there's so many things that you can do once you've got that bit of equity behind you.
And that's not just for elderly, that option.
That is not just for elderly.
Yeah.
That obviously comes with repayments, and you would get, instead of legal advice, which you can absolutely get, but we would be encouraging accounting advice is something we would be getting.
Yeah.
Unless you're getting a cash out for renovations or tidying up. I've got a settlement tomorrow for a client who we're tidying up a whole lot of debt. We're kind of moving it into the home loan, still going to get it paid off in a set period of time, but that way they don't have 8 different repayments coming out and money going everywhere. They've just got one mortgage repayment to try and tidy it up.
Which, this is going to sound really nerdy, but I think this is what excites me about broking is that it's not just a black and white, this is what we offer, like coming from the bank. The bank gives you this, that's all if you don't fit into that, then sorry, we can't help you. But how cool that you can, that's just
I spoke to a client yesterday about buying a commercial premises for his business, and this one's really exciting because I spoke to him quite a while ago and I knew he would be nervous. And even last night I was talking to my husband because he knows him, and I said, this could happen, but I think he'll get nervous. And then this morning I have an email saying, yep, made an offer. I'm so excited for him. But even just so the conversations then, okay, what are we buying? Is this going to be in your name? Is it going to be in a business, an entity name? Is it going to be in the super fund? Like, how is it happening? And then talk to the accountant to find out, what's the best structure. It's really exciting.
Well, this has opened my eyes to that option too, personally. Yeah. Which you wouldn't know. I mean, yeah.
And this client almost has enough equity in his property just to do a cash out loan and then go and pay for the property. Now, that's not the structure we're using because the accountant has important
Again, you need
things.
to see an accountant to discuss those options.
Yes. And there's important things like, changes to trust and things like that the accountant is going to work around. And that's not for us to say. I will just do what I'm told when it comes to what entity we're putting it in, but it's fun, right?
Yeah, that's cool that you can give someone that option to do that.
And every part of me, when I look at it, I go so he's only young. In another 10 years, he will have paid a chunk off that. He'll own some of that. He'll pretty much own his property. He'll have a business that he can sell as well. He's really setting himself up, which is really fun.
Yeah.
And if he didn't have his home and the equity in that home, it's a lot harder.
Yeah.
In fact, I probably, with the numbers, probably wouldn't be able to be doing it with him right now. We'd be looking at maybe doing it in the super or looking at other options.
Yeah.
So having that equity means that, even if you're young, there's options for you. And then as you get later on in life, if you've got lots of equity, don't think that, now I'm sitting on all my cash and I've got no cash flow and I can't pay my bills.
Because I'm not earning as much as I did when I was younger.
Yeah. Yeah, there are
Not always
things
the
that we
case.
can do rather than, okay, now I have to sell. And, it may not be the right time for you. It may not be the right environment you want to sell in. It just might not be right for you yet. You don't have to sell. You can at least have a conversation.
Yeah, that's pretty cool.
Yeah. I
That's
think that's a wrap.
That is a wrap.
Dollars on our mind. Ideas all the time. We might get distracted, but we're building wealth just fine. This is dollars and distractions. If we went off track,